Hello, welcome to episode 11 of Real Estate with the Carters. I'm Anna Lynn Carter,
And I'm Christopher Carter.
and together we are the
Carters.
Carters. Yes, welcome, everyone. Thanks for joining us. We're filming our 11th episode, and it's been great so far. Thank you guys for your feedback and comments that you've thus given us thus far. We appreciate it. We definitely do.
All right, please continue to like, subscribe, share. Share the videos with your families, your friends, even your enemies, because we work with them too.
Okay.
As Ann said, we're thankful for all the support, all the feedbacks, and please continue to to come with us on this journey as we build this channel and help serve you in the real estate market. All right.
Yes.
So, episode 11, what's on the table for today?
Okay, so episode 11 is paying off your mortgage a great idea?
So paying off your
Right.
mortgage early, is it a good idea?
There you go. Paying off your mortgage early. The
Right.
operative word. Paying off your mortgage
Early.
early. Is it a
Right.
great idea?
This is a great idea.
Yeah.
All right, so let's jump right in. So generally this question or this topic is about, what is my situation? What is my current situation? So it has to be based on the individual,
I
right?
agree.
If I have no debt except my mortgage, then possibly paying off that mortgage early is a great idea.
Right.
But then if I have other debts like credit cards, car
most people do.
payments, student loans, other debt that may require that funds to be allocated differently, then paying off the mortgage may not be such a great idea. So what we want to do today is kind of walk through the pros and cons so that you can get a better understanding of, what entails and if you're, looking into paying off your mortgage early.
Okay.
All right. A significant part of most people's expense is a mortgage payment.
I agree. Yes.
Usually takes up upwards of 30%, 40% of their income, their disposable income. So getting rid of that payment is a great idea.
Yes, it is.
Generally.
Yes.
But if it comes at the expense of other things, then you could probably put yourself in a deeper financial situation than if you had kept that mortgage and then concentrate on the other stuff that may need more urgent attention.
Right.
All right. So again, we said it's just
Based on the individual person.
correct.
Right.
It's
'Cause
not a yes or a
or
no.
no.
It's just
Right.
based on your. So you have to assess where am I at in my financial journey.
Right, because everyone's financial situation and their goal that they have is different. So you can be paying. You have other priorities that you have, right? So
Right.
credit card, medical bills, like you can pay those and chip off your mortgage payment, like paid, like
Yeah,
most people do
monthly.
monthly,
Right.
Until you eventually paid off.
Right.
But again, it depends on each person's situation and goal, right?
All right, let's look at some of the benefits now of paying off that mortgage early. All right, so let me go with the first one, which is the most obvious one. You're freeing up funds.
Right.
So if you don't no longer have that mortgage payment on a monthly basis, then that monthly payment, say 2,000, 3,000, especially where mortgage payments are now, we could be talking about a couple $1,000s.
Right.
That payment could be put into a savings account. You could pay off other bills. You could use it to build generational wealth, where you buy investment properties, invest in something. You could send yourself back to school. So freeing up that funds open up, a gateway of other opportunities that you can do with that money because you no longer have that mortgage payment.
Right. Also, another thing it does, it potentially help you save money on the interest because for the first couple of years you're paying mostly the interest on the mortgage, right? So, paying off the mortgage early will help you, I guess, pay less interest that you'd have eventually pay on this property, on the property,
correct.
or on the
So
loan.
if you have
the
a
loan.
30-year fixed mortgage and you
mortgage.
pay it off in 15 years, theoretically you're saving 15 years of interest payments.
Right.
Right. So again, it's a great idea to not have that mortgage payment on a monthly basis because you'd
Right.
have had paid it off and you're free. Right.
Right.
it also provides a peace of mind. For instance, if when you're getting
Not having a
older,
mortgage payment at all.
right, when you're getting older in age, and job security may become an issue.
Right.
So again, mortgage payment is usually 650, between 30 to 50% of most people disposable income. So if you no longer have that payment, then you could be, you in a better space mentally,
Right.
knowing that God forbid you're no longer working, then you don't have that payment to be contending with on a monthly basis, right?
Right.
So that peace of mind that it brings is, worth millions,
Agree.
right?
Agree. Right. Agree.
All right. Now, is there any disadvantage with paying off that mortgage early?
There are.
Yeah.
Yeah.
Let's walk through some of them.
All right. So one of the disadvantages, like that money that you paying off your mortgage early, like you won't have that cash on hand,
Correct,
right? Because that money will be tied up into the property.
Right.
So
So yeah.
that's one of the first things that most people's like, why would I want to put all that money into a mortgage payment? What if, like you said, that there's other things that you have or priorities or life happens? So if you don't have that cash on hand, it's already tied up into the property. So now you have to probably refinance, take out a HELOC or something, which is gonna be it's gonna be cost effective in doing so.
Right. And that's absolutely correct. Because if you put, say you have a mortgage balance for say 200,000, for instance, and you get a windfall of probably some money, back money from work, or you win the lottery, whatever, and you put that money in the mortgage, you can't just take it out back. You
Right.
have to first qualify to be able to take it out. So all of that liquid funds is locked into the
the
mortgage.
mortgage.
Now, if the price of the home or the value of the home fluctuates, then that fluctuates too.
Right.
And so if you put $200,000 in your house, and now your property only worth 300,000, it may not have been such a wise decision to put all of that money in the house in a market where the prices are going down.
Right.
So that could be an issue. That money that you put in the mortgage, you could possibly put that in other instruments that gain higher return, and then you could use those returns to pay your monthly mortgage payments.
Right.
Right. You also have a tax deduction that you get when you have a mortgage
payment.
So by not having that mortgage payment again on a monthly basis, then that tax deduction then just automatically goes away.
Right.
So definitely there are stuff to consider when paying off that mortgage.
Right. And also too, there's some mortgages that have like a prepayment penalty if you do pay off the mortgage early, right?
Absolutely correct.
Right. So you need to find out if your loan is there a prepayment penalty in paying off that loan early.
Correct.
Right.
So we're definitely not saying it's a yes or a no. Again, it's pros and cons.
Right.
What are the pros? What are the cons? Let's weigh both of them together. Let's see based on my individual situation.
I agree.
So my neighbor, my friend, my family could have a different situation which requires them to make different decisions than yours. You have to kind of look into your personal situation and say, based on where I'm at financially, is this the best move? Now, if you have like high interest credit cards, then I would say no.
Right.
Pay off those
high interest
credit cards first before you start thinking about paying off your mortgage. Again, you have to assess your situation based on what is in front of you. All right. Now, as we mentioned, it's your personal situation that is going to make or break that situation. I recently we had a client that is getting older, and she asked this very question: should I, she has some money saved up in her 401k, should she withdraw that money from the 401k and pay off the mortgage, because then she won't have a mortgage payment, and that would kind of put her in a better peace of mind. One of the things that she did not consider is that taking that money from that 401k comes with some expenses, because there's penalties to take that money. So if you take that money from your 401k and you have to pay, say, 15-20% of that money, and then to go park that money in the mortgage, maybe in her situation, it wasn't such a great idea. Again, it's analyzing your situation and seeing what is best in your situation, and then make that decision based on your situation. We're gonna go for a quick break. Let's join us back in a couple of minutes, and let's kind of walk through some other issues that you need to consider if you're consider paying off your mortgage early.
All right.
All right. See you soon.
Life is full of challenging decisions. Finding the right mortgage company should not be one of them. We at Loans Hub Mortgage and Finance are leaders in residential mortgages, refinancing, and investment property financing. We have a loan solution for your every need. Call us today at 954-947-8662, or you can find us online at www.loanshublending.com. Your next approval is just a phone call away. Loans Hub is an equal housing lender, NMLS 2220747. Welcome back to Real Estate with the Carters. I'm Annalyn Carter.
And I'm Christopher Carter.
All right, so we're going to get into the second segment of the show. We're discussing whether it's a good idea to pay off your mortgage early.
Okay. All right. So one of the downside of paying off your mortgage early is its effect on your credit score.
Okay.
Right. And this is something that you have to kind of look. It has different dimension depending on your mix of your credit. And let me kind of explain a little earlier. So now, if you have like 5 different kind of credit, like you have a car payment, a mortgage, credit cards, another installment loan, then possibly paying off your mortgage is not going to significantly affect. And even if it affects it, it may affect it temporarily, and
right.
then eventually it goes back up.
Okay.
But if your only debt is a mortgage, and after paying off that mortgage, then you have no other debt reporting on your credit, then that could significantly affect your mortgage payment. So that's one of the issue that came up is, how does this affect my credit? It could temporarily affect it, or it could affect it a little in a lot more long-term period if based on the nature of what's on your credit.
Okay.
So if your credit is just bare, like one card and then the mortgage, and they pay off that mortgage, and then the only thing that's supporting your credit score is the one single card, then it's quite possible that you could see, some drop in your credit score. Again, it could be only temporary though, because then over time it could see it going back up. But that's something that you definitely want to consider in this whole process. Now, we want to talk about some strategy in paying off your mortgage early, is that something that you want to consider. So the first one is the bi-weekly payment.
Okay.
So instead of paying monthly, right? And so if you pay monthly, and there's only 12 months in the month.
In the year.
In the year, sorry. So only 12 months. So if you pay once a month, it's only you're only paying 12, right?
Right. If you pay bi-weekly.
If you pay bi-weekly, then when you at the end of the month or the end of the year rather, you'd realize that you actually paid more than 12 payments, because there are some months that have one extra week.
Okay.
Right. So for instance, if January only have 4 weeks, February have 5 weeks, another month have 5 weeks, then you'll see that you're gonna, because you're paying every 2 weeks and not at the end of the month, then you're gonna have to make, at some point you're gonna be making an extra 1 or 2 payment.
Okay.
And then by paying that extra 1 and 2 payment over the life of 30 years, you'll realize that you may save yourself 5 to 7 years just by making it a bi-weekly payment instead of a monthly payment. So that's just one strategy in paying off that mortgage. You can also make lump sum payment towards that principal balance. Say, for instance, you started a mortgage with $400,000. Every month you're paying on that principal balance, right? However, a portion of that payment, a part of it goes to principal, part goes to the interest. But in the earliest stage of the mortgage is a bigger chunk that goes to
To
the
the interest.
interest payment as opposed to the principal payment. You can say to yourself, okay, I'm going to every year apply 1 month's worth of payment
To
to,
the
to the principal
principal.
balance. And if you do that consistently for 10, 15 years, you can see that you'll probably save yourself anywhere between 5 to 7 years just by making one extra payment a year towards your principal, right? Now, if you do that even more frequently, instead of just doing one extra payment a year, every month you could say, you come to find yourself an extra 100, $200, $300, whatever it is. You could say, I'm going to allocate that portion to my principal balance.
I guess most people are asking where would they get that extra money from.
And that's
But
something that we're
we're
going to
going to
walk
walk on.
through where that extra money is going to come from. But that's another strategy. Another strategy is to round up your monthly payment.
Okay.
So say my payment is 1,340. I could make it 1,400. And that by paying that extra, 40 or $60
$60. Mm-hmm.
towards your principal balance every month, then that is going to obviously over a 30-year period reduce your the term from possibly a 30-year to possibly 25, 26, depending on how much you add to that. So those are some strategy. Another strategy that you could employ is making a lump sum, a big lump sum payment. Say you win the lotto, or you
Okay.
get some money from your
Inheritance or
inheritance
bonus,
bonus, your job,
which is what we're
give
going
you
to.
a bonus, right? And a lump sum that you come into your tax returns or your tax refund rather at in the tax season, whatever that lump sum is, you can apply that lump sum to your mortgage, to your principal balance, and that's going to save you a year or a couple of years on that mortgage payment.
Okay.
Again, is really analyzing your particular. You may not be able to do a lump sum payment. You may only be able to do a bi-weekly, whatever. You have to look at your particular situation and to see how can I use my situation to my benefit in terms of what strategy I can employ to get that mortgage paid off early. Now, and really ask the perfect question: where will that money come from? Right?
Yes, sir.
Because most people can barely afford to pay that mortgage payment in and of itself,
Right.
but to
To
go add
an extra
additional
payment or a
payments
lump
and
sum of payment.
correct
Right.
to that balance. So here are some
All right.
suggestions.
All right. So we came up with a couple ideas where you can, generate funds to pay off
Right.
your mortgage early. One of the things is like most people could work overtime, right? So working overtime at your regular job will give you extra cash,
Right.
hoping that you
Definitely.
can use that towards the mortgage payment or extra payment that you'll make towards your mortgage.
Okay.
Crystal alluded before that your tax refund, right? So you do your taxes and you get a refund, you can use that refund in towards helping paying off your mortgage early. Other ways of that things that you can do is to get start a business,
Right.
right? So
Right.
you can have a business on the side.
Right.
So whether it's an online business or a side hustle, or you have skills or things, something that you can do to make extra income, right?
Correct.
You can also potentially say rent out a room in your
Yeah.
house, like most
Yeah.
people do nowadays,
Yeah.
just to get by.
Airbnb. Right.
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 So if you're in a position where you don't you can rent out a home in your room or converting your garage to an Airbnb, those are suggestions that things that you can do to earn extra income.
Just give you a story. So I met a client a couple of years ago that her backyard, she converted it into like an oasis where people rent it for like parties
or
and stuff like that. And it's the back. But if you go to the back of her house, you think you're in some
like a garden or something. Like
right,
okay.
right, and that extra money. Another thing that I see people do, like people that live close to like stadiums and those other places, they do parking,
Okay.
and that could give some extra money. So what we're saying is that whatever extra money you can come up by finding some extra way of generating that money that could use towards, you know, paying down that mortgage, right? Side hustle, as Ann said, overtime, your tax refund, the business, it could be just any one of those. But by applying that money towards the mortgage, towards a principal payment, that could save you 5 7 years, some possibly 10 years on, on a 30-year mortgage. That's gonna be a lot of money that you save. All right. Now, in closing, let's kind of just walk back through some of what we spoke about just to kind of reinforce them. So, again, most people would not be in a position, but you have to assess your situation based on your particular situation, right?
Yeah, what your financial
goals, your financial objective. I suggest at all time paying off interest bearing debt first before you consider paying off your mortgage. If you have credit cards, student loans, car payments, whatever those debts are, short-term debt, whatever they are, I would suggest paying those off first.
Okay.
Before you start, diving into paying off your mortgage early. Remember that once you put that money in your mortgage, that lump sum amount,
you don't have that cash on hand.
That cash is no longer available. So to get it back out is going to require procedures that may have time frame and cost.
Okay.
Right? So just bear that in mind. So if you have a lump sum that you want to, dump into the mortgage, just bear in mind that to take it back out may be a little bit more difficult than to put it in.
And there may be costs that's associated with doing so.
Correct.
All right.
Again, your financial stability is what is going to be affected. So you have to make sure that whatever decision that you're making, you're able to deal with it over a long-term period. And then funds to help you to pay off that mortgage early could come from many different sources. We went over a couple of them. Side hustle, part-time job,
a bonus, inheritance,
right?
Whatever windfall, win the lotto,
right?
Right.
So all of those, or even some other ones that we may not have mentioned, if you apply those and apply the money that you get from those to the mortgage, it's going to save you over the long term in terms of paying interest. The interest on the mortgage. So you're going to shrink that interest amount and save a lot on paying off your mortgage. All right. So that's going to bring us to the end of today's show. It's again, it's important that you analyze your financial situation before you consider paying off your mortgage early. But from where we sit, we believe it's an absolutely great idea if you can.
That's right.
If your financial situation allows you to, I say go for it. You're going to save yourself years of interest payments.
Yes.
And you're going to put yourself in a better peace of mind if you pay that mortgage off early.
Yes.
Right?
Yeah.
All right. So thanks a lot for joining us. Thanks a lot for tuning in. Please continue to like, share, subscribe. Let's give out some numbers so that if you're out there listening and you want to reach out to us, you can.
All right. So my number is 786-214-1436.
My number is 786-985-1383.
All right. So you guys turn on your notification bell so you don't miss an episode. Okay. Right. Like Chris said, thank you for your comment and your support that you've given us, and we appreciate it all.
Right. All right. Have a great week. We're getting closer to Thanksgiving and Christmas.
Yes. That time of year again.
Right.
Again. It's just the other day. But it's a great time of year.
I
We all
like
get
this
to
this
hang
is
out
my
with our
best.
families and friends, and
This is my
So-
best time of year because I get to eat Christmas cake and all of that, all of that jazz.
yeah.
So I'm definitely looking forward to that this year. But have yourself a great week. Be productive, and tune in next week for episode 12
Yes, sir.
on Real Estate with the Carters. Bye for now.
Bye for now.